like Lightning, which facilitate smaller and much more rapid payments, have come online. We've seen challenges from the Bitcoin hard fork kind of dissipate. At one point towards the end of last year, Bitcoin Cash was about 30% of the Bitcoin network. Now that ecosystem has had some infighting and has fallen down to a combined 7%. And if you look at the developer activity and just the institutional interest in building tools that make this asset class more accessible, those have all improved drastically over the course of the past year. So price has fallen. It's done this about 4 or 5 times, 80 to 90% corrections. If you look at any other time scale aside from just the last 12 months, this has been one of the top performing assets in the world.
Mike, when you're looking at trying to do technical analysis, it's incredibly hard. There aren't many fundamentals to even go off when it comes to cryptocurrencies. When you're looking at Bitcoin, for example, we got Tom Lee, who's over at Fundstrat, who's saying, you know, I'm still seeing a much higher overall fair value price. Where do you see fair value when it comes to, in particular, Bitcoin?
Good question. I like to look at the migration process, and it's very important to recognize what just Ryan just said. This is the past when the market was for the select few. Now it's institutionalized. We're having more regulation, adult supervision, futures, options, even the Bloomberg Galaxy Crypto Index. So the market's changed, and for my key level I've been looking for over years, a base. Where's the base for Bitcoin? And I still look around 1,500 or so. That's been the continuous mean. That's Bitcoin alone.
So more to fall, basically.
More to fall, but getting closer. But a lot of the indications are showing it's really getting close to forming that base. Indications are getting oversold, and finally seeing supply decline come off a little bit. I mean, overall supply, but overall, and the key thing I want to watch is I need to see volatility get to new lows. The last time volatility, 180-day volatility bottom at the low was 41%. That was October 2015. That marked the beginning of the bull market. It needs to go to new lows and probably stay there for a while.
I got a question for everybody, though. You're using Bitcoin and crypto interchangeably. And to me, that seems like a mistake because Bitcoin seems to have gotten caught up in the whole mania, the bubble issue, whereas crypto, the idea of mediums of exchange is something that is a different issue.
Well, as we think about the asset class, we really do think about it as a whole re-architecture of the financial system where you'll have currencies, you'll have commodities, digital resource tokens, which could provision things like file storage or computing power, scarce digital resources of real economic value. And then finally, you have actual securities that are just issued on top of this new technology.
And that's starting to happen, right? People are looking at putting credit markets in particular on crypto.
Exactly. Yeah, and so I think if you look at the fundamentals, dating back the past few years, Bitcoin may be one of the healthiest right now just because it's the longest dated. It's been around for almost 10 years. It's been through these cycles before. Where you want to actually do a little bit more diligence and deep dives, both in technically and in terms of the economics of these systems, is in the longer tail of assets. Which of these are going to come out the other side intact, and which are on a slow and steady march down to zero?
Thoughts? I mean, when you look around, you mentioned the Bloomberg Galaxy Crypto Index, signs of institutionalization of the space. I mean, price indices are sort of key to everything. Do you get interest from people and sort of some of the more tertiary coins, or for now, do people just sort of care about the price of Bitcoin?
It's kind of shocking the amount of interest I get from people who want to provide data and information. And to me, that's an indication that it just needs a good gleaning. We need to, more of what we're seeing this year. We need some of these peripheral coins that, you know, the total on coinmarketcap.com is over 2,000. That probably needs to drop by 50%. And if you look at just the top 10.
That's conservative.
Well, yeah, exactly. So you look at the top 10, the best performing in terms of capitalization this year is Tether. It's a stable coin. To me, that's where, if it's a currency, that's where we need to go, to stabilization. Now, I do believe Bitcoin is a good value for digital gold, but it's still way too volatile.
When it comes to stable coins, this is something that's certainly been a theme of 2018. It feels like we started with Tether, but now we do have some more coming to the fore. The likes of what Circle has launched, for example, which is a Boston-based company. Are you starting to see, Ryan, stablecoins doing what they should do, what they're meant to do? Are they going to help evolve the space?
Well, I think stablecoins, at least some of the ones that you mentioned, are certainly good for inter-exchange liquidity and allowing trading between some of these different global organizations. But if you think about it, the solutions from Paxos, from Circle and Coinbase and USDC, they are really centralized stablecoins. So what actual difference do you have between a centrally managed digital currency that's fully reserved and something like Bitcoin? The similarities are few and far between. One stablecoin project that is fairly interesting and that's held its peg despite being collateralized with Ether, which is down 90+%, is Maker. and their DAI currency, which is actually powering a lot of the decentralized applications that are actually starting to get experimented with. Very, very small volumes, but I agree that you do need that backbone for any of these censorship-resistant applications to ultimately pan out and gain any type of adoption, because no one wants to play with an asset that's going to move 50%.
Mike, you've just been in Argentina, for example. Many felt that crypto and the raison d'etre, the thing that was really going to help was for countries that didn't have a stable currency of their own, or certainly it was very hard to transact internationally with it. Is this something you still see or hear from the likes of Venezuela or the likes of Argentina, that cryptocurrencies could be an answer in whatever form, whether it be Bitcoin or whatever cryptocurrency or indeed store of value we want to talk
Interestingly,
about?
we saw some stores with signs that said Bitcoin accepted, but it doesn't seem to be widely adopted. People don't seem to be looking at it as the solution to their problems. I don't think anything is going to save Venezuela at this point. But Argentina, you make a good point, where people don't know necessarily what the value of the currency has been because it's been so volatile. But Bitcoin has been nothing if not volatile. So is the answer there?
I would say that has more to do with just the evolution of the ecosystem, right? I think in terms of where we are from an infrastructure standpoint, we can't really get Bitcoin into the hands of people that need it the most just yet. That's slowly changing.
Yeah, keep going. No, I was going to ask about, on a slightly related question about different currency correlations, because when I look on the terminal, we have CRYP Go, or you can sort of pull them up, and usually they're all red on a day or they're all green on a day. There's very little discrimination. Either it's a bullish day for crypto or a bad day. At what point do you think there will be a time where some are doing well and some are doing badly and some will actually have a view? Because right now it seems like they either all go down or all up at the same time.
Yeah, I mean, the answer is, honestly, I don't know. I think we've been looking for that decoupling since the beginning of the year.
It's surprising, isn't it, that there isn't more sort of discrimination among traders between good and bad projects?
Yes and no. I think what you'll more likely see is a long-term decoupling. We saw this in the last bull run, where if you looked at the top 10, 15, 20 assets from the 2013 run-up, almost all of them are gone, right? So these things do decouple over time. I would argue they might have to decouple during a bear market, not when people are fearful, but when they're just apathetic. And the only people that are actually using these assets are the power users, the ones building applications that are looking for true utility, things that technically work.
Isn't that part of the problem for widespread adoption we were just talking about, is that as long as you don't know what to invest in and it's hard to get into, people are going to look at it and say, I'm going to stay away from this. And so widespread adoption becomes a matter of self-fulfilling prophecy.
Yeah, I'm trying not to talk our own book too much, but the entire company that we've built, Nasari, is structured to answer this question. How do you help people become more knowledgeable about these assets and actually look at their fundamentals beyond just the price movements that you'd see on CoinMarketCap?
Well, I think that's getting to defining exactly what they are. Last year, they were highly speculative cryptographic assets. Now we're getting to points where Bitcoin is really digital gold. When you're in Argentina and you can leave the country with some of your value on a thumb drive versus gold shoving in your pockets, that's, to me, just an advancement of technology. And it's happening with Bitcoin. Now, some of the other currencies, well, cryptos that are called currencies, they're really not. They're still speculative digital assets. To get the currencies, they have to be more like Tether or Litecoin, where they can actually transact with very little volatility. I think we're getting there, but we're still, that's my point, is we still have much further way to go in terms of volatility and stability.
Ryan, you make a really interesting point. You say, talking about the applications that we'll start to see built on these things. Where is the killer dApp? Because at the moment, I'm still hearing, oh, well, CryptoKitties was really successful. I'm sorry, that was a 2017 story. And how much are we going to start to see these Ethereum and the likes of the blockchains being built upon with interesting applications?
I mean, the initial use case is still money, right? If Bitcoin or whatever the winning cryptocurrency is, captures just a quarter of offshore banking and emerging market fiat currency reserves, then it's a $10 trillion asset just by itself. So in some respects, that's a big enough opportunity for the near term. And if you look at something like Ethereum, it's much, much younger. The public blockchain has only been around since 2015. That's 3 years versus 10. There's that much less infrastructure build that's had a chance to happen just based on sheer time.
Well, let's just focus on the Ethereum / smart contracts part of the world. Is any of it working or even close to working or getting anywhere close to meaningful adoption?
Yes and no. I'd say today, very, very few. But what we did see in 2017 in the run-up was Ethereum, Ether itself became a reserve currency almost for a distributed investment bank. So if you think of Bitcoin as a reserve currency for a distributed central bank, the run-up that we saw last year was largely fueled by these ICOs and the billions of dollars that were invested without permission from the SEC or any of their international equivalents. Now, you can argue about the merits of those assets that raised money, but Ether itself proved its value. Ethereum proved that it could be this censorship-resistant form of capital allocation. The only other one currently, which I already mentioned, is probably Maker, which is a fully collateralized stablecoin that's built entirely on the Ethereum blockchain. But we're still light years away from anything even remotely resembling mainstream adoption for those, even for something like Bitcoin.
Well, how do you define light years? You mentioned the idea of a 25% of offshore reserve assets. The Chinese yuan has been now a reserve currency for about 3 years, and it's got about 3%. And it is used by people in the actual economy. So
I think we look at the long tail of currencies, national currencies, right? So Argentina, Venezuela, African countries, right? If you aggregate the bottom 150 or so currencies, you have to imagine that many of them already use the dollar or something pegged to the dollar or pegged to gold. If you have that emerge over time to an M-Pesa-like international reserve currency, that could look something like Bitcoin or a derivative of it.
All right, Mike, let's get back to what a lot of people care about, which is trading and making money. So this year has been a lot of disappointing to people because several times they're like, oh, this has got to be the bottom. And then it falls another 20%. And then they're like, okay, but this is the bottom. And then it keeps plunging. Just from your sort of trader cap, what would be the types of things you'd watch for to say, okay, no, this is truly capitulation? Is it just sort of indifference overall, like a sense that everyone is truly given up?
We're getting near signals like that now. The RSIs are buried. The market's going straight down. The market's well below its 200-day average. You look on the chats, everybody's bearish. That's what you're looking for. It's the wrong time of year. There's tax loss and actually tax gain selling from last year that people didn't do yet. So I'm looking for those indications. And the opposite of what happened this year, when we mentioned Ethereum, when Ethereum's main competitor EOS was launched, and we had that pump, we had Bitcoin Cash pump, those kind of things you need to see the opposite, when the market gets buried and looks oversold. It's just not there yet.
Do you think there's any correlation between risk appetite and legacy markets like stocks and crypto?
Oh, completely. I think people are missing that point. Last year was a key thing. The VIX was the lowest, the longest ever at the same time, almost within the same month that Bitcoin reached the highest forever. And guess what? We're just mean reverting right now. And the key level, if you look at means in like the S&P 500, it's 2,400, and the VIX is 1,500. Market's coming back to that. To me, it's not as big as the housing market in 2008 when the VIX reached the previous low, but to me, that's a key thing that needs to be mentioned is this bubble we had is just bursting, and it's happening everywhere in the stock market. It's just indicative of what markets needed to do is mean revert, and the VIX is just going back to its normal levels.
So what happened to the diversified trade? What happened to this being separate in some way from this equity market? Do you see it as something very similar when risk appetite diminution?
And look, this might be a cop-out, but it just comes back to how early this asset class is. At some point, I do think that there will be a recession that's an inflationary recession where investors flock to something like a digital gold. Some will go to gold, some will go to a digital gold, and that right now would be Bitcoin if we saw an event like that. Now, whether that will happen, if I knew how to buy the bottom and sell the top every time that this market has moved, then I wouldn't be here. I'd be on the beach. But maybe you can show me the way after.
Yeah. You said something interesting about Ether and this sort of distributed platform from capital raising. And that's good on the way up, but a lot of people have been talking about this phenomenon on the way down, where a lot of projects have treasuries, have a lot of money in Ether, and then as the price goes down, they see their runway of collapse, and then that forces further liquidations because they got to pay their developers, and then that reduces the runway for everyone else, and you have this spiral. Is that process real? And if so, how far along are we in that sort of essentially the opposite of the capital raise period?
I think everybody's trying to figure out the answer to that exact question. One of the things that we're working on at Messari is driving transparency standards for many of these projects that did raise money. And one of the key inputs there is, what does their ongoing treasury look like, right? You only hear about teams' treasuries after they're laying people off and they say we have 12 months, we have 18 months.
Right.
And we've seen that with a few projects that didn't really manage their treasuries appropriately. Yeah. How pervasive that was and is, I still don't think we have a full grasp on. What I do think is interesting is will this religious community of supporters that have developed around this Ethereum ecosystem, this is a pretty difficult battle that they need to overcome, right. and are they really true believers that'll get through the trough here, or will you start to see some defections to other more stable, well-capitalized projects that might start a little bit more centralized? EOS is a perfect example. The Affinity, Cosmos, which is another project, both are private now, but will come online in 2019. Will developers start using those other blockchains because Ethereum has gone so low and it's become insecure?
There was this talk, I remember 2017, 2018, that VC was going to be dead itself because ICOs was a new way of raising cash and a new, cleaner way of raising money. Do you see that as a future? Do you think ICOs have died their death to a certain extent because there is so much more regulatory hurdles for them to jump through?
Well, self-inflicted wounds. I mean, people look at what happened with some of those and feel like they got scammed, and we're not going to be interested in that. To me, one of the interesting aspects of the whole discussion is that there has been some talk, but no real movement towards any kind of regulation of these things. And if you're really going to be adopted widespread and it's going to have an impact on financial transactions around the world, governments theoretically should be getting nervous and getting involved, and we don't see that yet. So I'm wondering, when does that come along?
Joe, you were looking just last week or the week before that we are starting to see people wanting or looking at ICOs, the money that they've raised, and saying, look, maybe we're going to have to get some of our cash back. It was Pantera, wasn't it? One of the hedge funds that is looking at.
What was the quote? It's not a thing you want to have to tell your investors, that 25% of the projects you've raised might not have been legitimate securities and have to be liquidated. What do you, is there progress being made on this from your view, or is it still everyone just sort of poking in the dark, trying to get regulators to make a comment that backs up their own view?
I think it's a little bit of both, but remember, Uber went against the taxi cartel. Airbnb has fought their battles in every single city when it comes to hotel regulations. So this is more about a new technology, a new asset that doesn't really fit as cleanly into any existing regulatory structure. Now, the SEC, the CFTC, the IRS, name your favorite 3 or 4 letter agency, they're all claiming dibs on who can regulate this the fastest, and that's created a lot of this confusion. But I don't think that whether you're talking about a cryptocurrency and the way that funds flow through something like Bitcoin, whether you're talking about an ICO, that these fit far outside of any existing regulatory structures. It's just, I think the regulators are really trying to grapple with this and figure out how are they going to set precedent and make sure that other good actors have the ability to comply and continue to innovate.
We have a question from a viewer, and it's something that I think in 2016 and 2017, you heard this a lot, that Bitcoin was so centralized in China between both the mining chip design and the actual mining itself, that China de facto had a significant control over the currency. Is that right, and how much control could the Chinese government potentially wield on Bitcoin with the current level of concentration there if they were to find it a threat?
I'd say leave China aside for a second. Geopolitical risk is probably like the granddaddy of all risks to this asset class still. If a government wanted to, or a group of governments decided that this technology was dangerous and they wanted to try to centralize transactions, it would pretty quickly be moved underground. With respect to China, I actually think that's been de-risked quite a bit in the last year, mostly because some of the largest Chinese mining manufacturers went to the Bitcoin Cash side of the hard fork from last November. And actually Bitmain is rumored that they're having trouble with their IPO listing right now. And I normally don't speculate on rumors, but if you just look at the economics of that business and how far of a nosedive it's taken, coupled with the amount of Bitcoin Cash units that they had on their balance sheet, it's scary times. So that's probably one of the biggest mining manufacturers in China. If you assume that that has siphoned off some of the total Chinese impact on Bitcoin mining in particular, then it might be a net positive if you're into Schadenfreude. But the other thing I would say is because China has been typically restrictive of this asset class, many of the mining companies that were previously located there have moved offshore.
Can I just follow on that real quick? Just follow up on that real quick. One thing I think a key thing to point out in the space is, and maybe to ask you about this, is China was a significant demand factor before, but now they aren't. They're only supply. I was in Hong Kong back in September, and the only word I heard everywhere was banned, banned, banned. You have to go offshore. You can't, if you're a Chinese on mainland citizen, you just can't get access to Bitcoin anymore unless you're a miner, which is supply. So I find that it's one thing that's really shifted in the space. It's pressuring prices.
Yeah, we were in China in June, and I can tell you that's not true. Now, officially, what the policies may be is one thing. Now, that's not to make light of a subject. If the Chinese government, especially through WeChat, is able to censor many of the projects and companies and service providers that focus on Bitcoin, then it is a long-term drag. But in terms of some of the larger holders and investors, I don't think that's really slowed them down. If anything, it's moved some of their operations and holdings offshore. They
still find a way. All right, this has been the great crypto debate. I want to thank our guests, Ryan Selkis, Mike McGlone, Mike McKee, Caroline Hyde, and myself. Thank you, everyone, for joining. And maybe we'll do same time, same place next year, and we'll see how different the world is. Thanks for watching.
Bitcoin possesses all the attributes not only of good money, but of supremely good money.
Replacing fiat currency with fiat digital currency is not an improvement.
If you want a market-based system of money that doesn't get shut down when it grows past the size of a novelty, it has to be decentralized.
Bitcoin is, it's divisible, it's portable, it's all these things. But apart from the fact that it can be utilized in transaction, it's nothing.
Nothing has intrinsic value. Intrinsic value is a meaningless term because value has to be subjective in the eyes of the valuer.
The bottom's going to drop out of the market like all bubbles, and everyone's going to want to sell. There's going to be no demand. There's going to be massive supply. The whole thing is going to implode.
Welcome now to the main event. Arguing for the affirmative on the resolution, we have Shapeshift CEO Eric Voorhees. Eric, please come to the stage. All right. Arguing for the negative, we have Euro Pacific Capital CEO Peter Schiff. Peter, please come to the stage. A very raucous crowd. Peter, please sit up there. I don't want you guys near each other. This is a raucous crowd. And I have to sit between you. And as you know, the resolution... Yes, yeah. Pass the gentleman. Oh, that's very nice. Okay. You guys get it on. Okay. Please, the resolution, as you know, is Bitcoin or a similar form of cryptocurrency will eventually replace government's fiat money as the preferred medium of exchange. Eric Voorhees, please take the podium and defend that resolution. Thank you.
All right. Hello, everyone. My name is Eric Voorhees. I'm the founder and CEO of Shapeshift, which is a leading digital asset exchange. It's available nearly everywhere in the world other than here in New York, because New York is quietly suffocating under a depressing pall of statism. The question of who's more socialist, New York or China, would perhaps be a good topic for a Soho debate. I'd like to thank Gene Epstein and the Forum for hosting the debate. I would also like to thank Peter for agreeing to spar with me here this evening. Peter is someone that I've looked up to for a very long time. Back in 2008, prior to Bitcoin, I listened to Peter's podcasts every day while driving to work. Much of what I've learned about money and economics came from him. So Peter, thank you for all that you have taught me over the years.
So smart.
And thank you especially for agreeing to take the position of defending fiat currency tonight, for Lord knows that I never would. Tonight, I make the case that Bitcoin or a similar form of cryptocurrency will eventually replace government fiat as the preferred means of exchange. I'll use the term Bitcoin loosely here to refer to any such cryptocurrency that accomplishes that goal. I'm going to construct the argument in 4 pieces. First, why Bitcoin is good money. Second, why fiat is bad money. Third, why gold or other forms of market-based money are insufficient. Fourth, why Bitcoin will win. So first, why is Bitcoin good money? As we all know, mankind has used many different things as money. Monies come and go, and the adoption of one monetary standard over another is the rule rather than the exception throughout history. But a society's choice of money is not arbitrary. There are certain attributes of money which seem preferable to others. Gold scores highly on these attributes, which is why it has remained an indelible monetary standard for millennia. To assess Bitcoin's likelihood of assuming the monetary throne for the next period of human history, one must first understand its attributes. First, I'll point out that Bitcoin possesses all the attributes not only of good money, but of supremely good money. It is not marginally better than alternatives, rather it is in its own league entirely. First, Bitcoin is provably scarce. There are only 21 million of them, and there can never be more. I can tell you exactly how many there will be tomorrow. The answer is 17,130,620. I can tell you the supply a year from now and 10 years from now. Let's see any central bank attempt such a feat. And yet, while scarce, Bitcoin is easily divisible. One Bitcoin can be cut into 100 million pieces and recombined at will. In terms of divisibility, Bitcoin wins hands down over both fiat and gold. Bitcoin is also durable. A Bitcoin exists as a ledger entry, backed up on thousands of computers around the world. Certainly, if the internet went down, you'd be unable to use Bitcoin, but that is also true of your credit cards, PayPal, banks, and any other form of modern money. So Bitcoin is at no disadvantage to fiat in this regard. Bitcoin is fungible. Each Bitcoin is worth the same as every other. It is recognizable. Every Bitcoin wallet can quickly attest whether Bitcoin is legitimate or not. A Bitcoin cannot be counterfeited. Unlike with gold, it cannot be filled with tungsten. And as one of its greatest attributes, Bitcoin is highly portable. You can send it anywhere on Earth for very little cost. It moves across borders with ease. It has no concept of borders. It has no weight. It has no smell. It has no physical body that can be blocked or apprehended. Indeed, it is the only form of money today which can be moved at distance without trusting a third party. It is the only money that doesn't require permission from an overseer. Therefore, it is the only money appropriate for free people. Finally, Bitcoin also possesses an important attribute which will one day be seen as critical for good money: programmability. Bitcoin can be programmed to enable all kinds of economic activity, often without a middleman, escrow agent, or human arbitration of any kind. This programmability, without having to trust anyone, is impossible with fiat, and in a digital age will come to be one of its most important advantages. Next, let's discuss why fiat is bad money. Why should we care about cryptocurrencies and their attributes when we already have fiat? Fiat works pretty well, right? It's got pyramids and government buildings printed on it, so you know it's valuable. Also, it is backed by paper. Paper can be burned if you're cold in the winter. There's its intrinsic value. Try that with gold. But a skeptical observer should know that fiat money is an absolute scam and something altogether inappropriate for an ethical market-based society. As I like to say, you cannot have a free market when the most important good, money itself, is centrally planned and controlled. Fiat money and a market economy are mutually exclusive concepts. Like oil and water, they can certainly be mixed up together when force is applied, but they will naturally separate and dispel one another over time. Indeed, the average lifespan of fiat is less than 50 years. The US dollar only became fiat in 1971. That's less than the length of William Shatner's career. And as it happened, last week he announced that he has started to mine Bitcoins as well. Regardless, when examining its specific properties as money, most ways fiat is unimpressive. First, it is not scarce. It is systematically created out of thin air with no limit on supply, nor can supply even be known. Fiat is willed into existence by politicians and banks because printing money enriches the printer at the expense of the public who holds the previously printed money. The phenomenon is known as inflation or currency debasement. Fiat also struggles with durability. Your fiat will only last so long as your bank permits, and even then it slowly loses its value. Your bank can destroy your fiat with the click of a button. Ask a Cypriot. Ask an Argentinian how durable fiat is. With fiat, you are ever dependent on a third party with your wealth. Is that an attribute of money that you find attractive? Some people are comfortable with it because they trust their government, but requiring trust in politicians seems a poor foundation upon which to build a prosperous society. Finally, fiat is not nearly as portable as Bitcoin. Try to send an international wire right now. You can't because it's after 5 o'clock. How quaint is that? You can try tomorrow morning as long as it's not Sunday, because apparently God doesn't want you to use the financial system on the Sabbath. But even when successful, you'll discover it takes 3 to 5 days for your wire to arrive. You often have to physically go to the bank to do this. You have to fill out a form on paper while someone making $15 an hour takes that info and types it back into a computer. Why do people put up with this nonsense? Indeed, it is faster to strap cash to an anvil and FedEx it to Tokyo than it is to send an international wire. Do you really think that that system is going to outcompete Bitcoin in an open marketplace? And you can only send fiat if you have permission. Try to send it to a family member in Russia. You'll be censored. Want to donate to a relief effort, perhaps, in Venezuela? Too bad, you'll be censored. Are you sending a suspicious amount? Your payment will be blocked, and you better get ready for questioning or outright confiscation. Yep, the Orwellian nanny state is alive and well, and fiat currency is one of its most insidious tentacles. Fiat has these poor monetary attributes because it is a tool and appendage of the state. It exists to serve the state, not to exist market participants. Its attributes as money are intentionally constrained and inferior so as to siphon wealth to the state through debasement and to surveil and control the behavior of the king's subjects. Remember that fiat means value by decree, not by merit. So why are gold and other alternatives insufficient? I love gold. I own gold, and I would like to own more gold. I understand why gold is good money, and Peter has done a great job of teaching such concepts to the public. But gold as a physical, heavy commodity cannot be efficiently used as money at scale. Imagine trying to run payroll with physical gold coins. Try to make change for a pizza with bullion. And forget about payment at strip clubs. Bruising women is not cool. Unless you're the New York Attorney General Snyderman. Suffice to say that gold, when in physical form, is impractical for commerce. For gold to work in a modern economy, it must be warehoused by a company, and then digital certificates or credits must be issued against that gold. Those digital certificates could theoretically work well as money in a modern economy, except for one problem: centralization. A digital gold payment service or any privately issued market-based money requires some form of centralized control or custody, and thus exposes users to counterparty risk. This is fatal, because if such a private company ever grows to scale, a government could shut it down, unplug its servers, arrest its principals, and seize its assets. This exact thing happened with eGold, and another company, Gold Money, was so scared of this happening that they stopped allowing payments of digital gold between customers entirely. Private money, when centralized, probably cannot attain scale and thus cannot surpass fiat because the government won't allow it. So why will Bitcoin win? Bitcoin will win because there is now competition in money, and Bitcoin is the best money currently available. Because it's decentralized, it cannot be stopped. It doesn't happen all at once. Nobody switches immediately from fiat and banks to Bitcoin and blockchains. Rather, Bitcoin will simply, gradually, come to be used as an occasional alternative to fiat. Individuals will find specific times and places in which it is easier, faster, safer, or cheaper to use Bitcoin to store or transfer wealth than to use credit cards or banks. Indeed, 2 billion people in the world don't even have credit cards or banks. For them, the choice will be easy. Yet despite the failings of the legacy system, Bitcoin now imbues every human on Earth with financial sovereignty. With Bitcoin, anyone of any age, race, or creed, no matter which imaginary lines they were born within, and nothing more than a $50 smartphone, can send and receive money anywhere in the world instantly at near zero cost, and there isn't a goddamn thing that anyone else in the world can do to stop that. It is one of the most potent tools of individual empowerment ever invented, and it is happening right in front of us. Fiat now persists solely on the momentum of tradition. The older generations may cling to it for quite some time, but they and their ways are dying, and their wealth decays in front of them, debased openly by the very people they worship, salute, and vote into office. Someday, school children will laugh and joke with each other as they learn about the silly flag paper with cultish incantations inscribed on it, which, in yet another of history's examples of mass delusion, people thought to be valuable. Or maybe they won't laugh and joke because they will have learned how much destruction it actually caused. Maybe fiat will be looked at more like medieval bloodletting, a dark symptom of human ignorance that is so obviously foolish in hindsight. Fiat will fall in time, and in its place, true decentralized market-based money will emerge. The profit motive alone will lead capital gradually away from those assets which can be debased and censored to those which cannot. To future generations, it will appear as inevitable as the collapse of serfdom, and for the very same reason.
Fibonacci 23%
This is why Bitcoin
reached.
or some other cryptocurrency will eventually replace government fiat.
Peter Schiff, take the podium. Peter, arguing for the negative. Take it away, Peter.
Yeah, thank you, Gene, for inviting me here. Soho Forum, Reason. I worked with Reason on the Occupy Wall Street video that I did. And Eric, thanks for dressing nicer than Max Kaiser, who was the last Bitcoin debate that I did. And I wish you could have persuaded me to buy Bitcoin a few years ago. But don't confuse the fact that financially Bitcoin has been a success for a lot of people who happen to get into it early, with whether or not it's ultimately going to succeed at replacing the dollar or any other fiat currency as money. And I'm not here to defend the fiat-based monetary system that exists today. I agree with Eric, it is going to fail, and I believe a currency crisis is headed for us. I just don't believe that the future is Bitcoin, that Bitcoin is going to succeed where the dollar or other fiat currencies fail. And to understand money, you have to understand its origins and what it's attempting to do. I mean, before the dollar was a fiat currency, it was a legitimate currency. And what is a legitimate currency? It's a currency that's actually backed by real money. In the case of the dollar, that real money was gold. Gold backed the dollar. And what gave the dollar value was the gold that backed it up. So nobody wanted dollars. Dollars were just a more convenient way of transacting in gold. And before governments began issuing currency, private banks issued currency backed by gold. Again, the private currency simply facilitated gold transactions. Like, I guess at the strip club, it's easier to put a bill in a stripper than a gold coin, right? So it made it easier. But the stripper is still earning the gold. That's what they wanted. And and then before they had paper money, they just had gold coins, right? Gold was, you just had gold coins, and coins were an improvement over just nuggets, right? Gold bullion. Why were coins better? Because if the coin was made from a mint that you recognized, you knew exactly how much gold was in that coin. And why is that important? Well, because gold was a commodity, right? And if you are exchanging goods or services for gold, you want to know how much gold you're getting, because that's, it's the weight of gold that's important. How much gold am I getting for whatever it is that I am selling, right? And before they had gold, we had barter, right? Everybody just had to trade one product for another product. Gold, money, the invention of money, right, made commerce much more efficient. And of course, gold was not the only money. It wasn't the first money, but it was the best money. And Eric did an excellent job of going over a lot of the characteristics that gold had that made it more efficient as money, other than, let's say, cattle or wheat or oil. Those are commodities, but they don't work as well as money. Gold worked beautifully as money, which is why more and more societies adopted it as money. And what Bitcoin did very successfully is it managed to replicate a lot of those properties that gold had that made it so successful as money. In fact, they created Bitcoin to resemble gold, right? If you look at a picture of Bitcoin, not that it actually exists, but the way they try to present it on a piece of paper, it's always the color of gold. It looks like a gold coin with a B in the middle of it. How do you create Bitcoins? Well, you mine them. I mean, there's no picks, there's no real mining, but they just called it mining because they wanted to make it sound like you were creating digital gold, right? But the reason that I have referred to it as being fool's gold is because Bitcoin is replicating all of the properties of gold except the most important one. And that's the metal itself, the element, the rare, scarce element that has been valued as a commodity for thousands of years. The reason people wanted gold as money is because it was a luxury good that people wanted. If you didn't want it yourself, somebody else wanted it. You can do all sorts of things with gold other than spend it. right? It's the actual uses, the physical properties. And it's not just the fact that gold is in jewelry, right? That's the most important use, but gold is in all the cell phones that we have. They use it in aerospace, they use it in medicine. I mean, and there's a lot of places that gold would be used, but they don't use it because they use other metals instead that are less expensive. But if they could afford gold, they would use it because gold would do a better job, right? The best teeth, if you want to get a crown, there's gold in it. If you want to save money, then you use something else. But if you want the best, you're going to have gold in there. And so there's real value there. On the other hand, Bitcoin is, yeah, it's divisible, it's portable, it's all these things. But apart from the fact that it can be utilized in transaction, it's nothing. It has no real value into itself as a commodity. There's no way to relate the price of Bitcoin to the price of anything else. I mean, you have thousands of years of history to know how much gold should be worth in terms of oil or wheat or any other commodity or whatever you're doing. But Bitcoin, there's no reference point. It's only existed for 9 years. It never had any value other than as a medium of exchange. There is this supposed 21 million unit scarcity, which is a self-imposed scarcity. The only reason it's scarce is because they created it to be scarce, except it's not scarce because Bitcoin can be forked off as many times as you want. There's Bitcoin Cash, there's Bitcoin Gold, whatever. Meanwhile, there's another 1,500 or so cryptocurrencies that can do everything Bitcoin can do. Some of them can do it better, faster, cheaper. There's no limit to the number of other digital currencies that can be created. There's only one gold. There'll never be another gold. Yeah, there are other metals on the periodic table, but they're not gold. They're not exactly the same as gold, but you can make as many cryptocurrencies that are exactly the same as Bitcoin. They just have a different name, but they have the exact same properties, although they may have better properties. They may be cheaper or faster. But the biggest problem with Bitcoin and why it can never be used as money is because one of the most important functions of money is that it has to be a reliable store of value, not just a medium of exchange. Bitcoin can do that, although it's inefficient. And I think at its peak when Bitcoin prices got up to 20,000, it was something like, I don't know, 50, 60 bucks just to spend one. So obviously, you couldn't use it
Fibonacci 23% reached. Fibonacci 13% reached. Fibonacci 23% reached. Fibonacci 13% 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 reached. Fibonacci 61.8% reached. Euro USD buy. Fibonacci 61.8% reached. Fibonacci 61.8% reached. Fibonacci 61.8% reached. Fibonacci 23% reached. Fibonacci 13% reached. Fibonacci 13% reached. Fibonacci 61.8% reached. Fibonacci 61.8% reached. Fibonacci 61.8% reached. Fibonacci 13% reached. Fibonacci 13% reached. Fibonacci 13% reached. Fibonacci 61.8% reached. Fibonacci 13% reached. Fibonacci 61.8% reached. Fibonacci 13% 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 reached. Fibonacci 38% reached. Fibonacci 13% reached. Fibonacci 13% reached. Fibonacci 38% reached. Fibonacci 38% reached. Fibonacci 13% reached. Fibonacci 13% reached. Fibonacci 13% reached. Fibonacci 38% reached. Fibonacci 38% reached. Fibonacci 13% reached.